How are you? Welcome back. Welcome to TradingView, YouTube, and my subscribers. How you guys doing? I hope you're having a wonderful Labor Day. All right. So, what's going on in the markets? A lot of euphoria. We've been in a euphoria for a very long time. Funded by excessive deficits, funded by quantitative easing. Um, it's a big problem because it distorts price and people think this is the way it's going to be forever. So they pile in, they put their savings in the market. Now, think about this: that if you go back in the day, first of all, the common man didn't have access to markets. Then we did have access to markets, but we were paying, I don't know, $150 back then. $150 to make a trade, one trade in, one trade out, to $300. Then they made it cheaper. Then they made it more accessible, the Mary trade and whatever. Made it some more cheaper, right? It went down $30 and I don't know, 19, 15, $5 a trade. Then they started doing the Forex. That became very popular. No trading fees, right? They had the split difference. Then Robinhood came around, and oh well, let's go even further back. Everybody was encouraged to have a 401k, dump your money in the markets, right? So everything has been geared for everyone to put money in the market. And this has been going on for a very long time. Just make it as easy as possible. Let the fools go out and gamble. They'll love it. We'll call it investing. Yes, go out and buy it. Yes. And we have literally gotten to the point where you cannot make it more accessible. There's nobody left. That's it. You open up your Robinhood account, you buy half of a share of something, and with a dollar, $2, whatever you got in your pocket, we'll take your pocket change. It's all right. Just put the money in the market, right? And then on top of that, we have the Fed backstopping risk. We got deficits being pumped into the savers of the top 5%, and they're running out and buying. And I think right now, in terms of stocks that are uh, profitable, I think it's the most in history of the most unprofitable companies ever at 44% of the S&P or something like that. I forgot what it is exactly. Uh, so, then you got the Bitcoin, right? Most people don't even understand why Bitcoin is Bitcoin. It's a dual global parallel currency. That's why it's going up. It's not because of blockchain. It's not because of this. I mean, of course, all those factors are required, but there's a niche in the market where people want to save in a currency that will not be debased. And, the volatility is excessive, so you should never use leverage. You should never short cryptos. Um, and that's going up every single day. It's been going up for years now. You'll hear many, many different stories why it is and why it isn't, and it's worthless, but it is worth something, and it's not, but it's not, but it is. Don't pay attention to it. All right, cryptos are going to go higher. Um, so yeah, so we've made everything as simple as possible for any Tom, Dick, and Harry to go in there with their pocket change and go buy stocks, and that's problematic. Deficits cannot continue to be, you know, 30% of GDP. That's not going to work. Uh, Something that we have to start to consider at some point in the future is that there's so much QE that's going on at 8.5 trillion that if God forbid they have to increase that, you're going to start running out of bonds to buy, right? Uh, we're not there yet, but we're making great strides towards it. So then that means deficits are going to have to increase so they can QE some more. And what is QE? QE is basically the Fed uh, exploiting this loophole where the central bank is essentially funding government, right, via the open market operation. And everybody's running out buying bonds, and they're like, why would they buy bonds? There's no yield. Yes, there's no yield, but there's price appreciation. And, that works great until it doesn't. And you'll hear a lot of people say, well, it's different this time because America owns most of their debt, so it's not a problem. Yeah, well, there's no patriot that is going to sit there and hold the bond when everybody else is selling and they're losing their ass. Patriotism goes right out the window. If and when that time comes, is what I call the snap moment. Everybody and their mom are going to start selling bonds. Interest rates will go through the roof. Servicing the debt will become a problem. Stock market is going to start to crash. And then you can print all you want, as much as you want. It won't make a difference. It won't make a damn difference. It will be too late by then. And that's my little spiel. All right, so consider these things. So for right now, we are in a 12-year resistance area in the S&P 500. We've been in euphoria here for quite a long time. Um, what else do I want to talk about? 10-year bond yield is 1.3, I think. Where is it at? There it is. This looks to me like it's coiling up for more upside. Okay, and that's problematic for the Fed. That's a problem. All right, thrust up, pull back, wave three coming to the upside. That's going to put pressure on stocks because the stocks earnings yield have to exceed. Well, they don't have to do anything, but should exceed bond yields, right? Um, so that puts pressure on uh, stock yields. And why would you go buy a stock that's quote unquote risky um, when you can just go buy a bond that's going to give you the same earnings yield? You know, think about that. Money chases yield, and the safer the yield, the more money is going to chase it. So if this does pan out, it's going to be interesting to see how the stock market is going to react. Uh, what else? Talk a little bit about cryptos. I won't go into individual cryptos. I'll save that for my subscribers. Um, I've been saying for a while now it should be going higher, right? Uh, I don't think that's going to change. Okay. Now, there's a potential area of reversal, or at least resistance, or some pullback, and that's probably right up here at about 64,000. Okay. All right. 64,000. It's going to be about 3 trillion in market cap. Okay. Now this line is not really valid. There is a hook that's sufficient. That's okay, but uh, this don't think of it as a resistance. I mean, there could be some resistance, but I should even change the color. Okay, this can be pushed up, and it would look something like this. So we could hit 80,000 this year, believe it or not. Yeah, we can. I'm sorry, did I say 80,000? sorry, 80,000 of Bitcoin. And I guess the market cap will go up to 5 trillion, something like that. Not sure. All right. Okay, so let's talk about some of the past trades that I've made. And remember, guys, I know most of you, your hair is on fire. You get so excited. Give me the trade. Give me the trade, right? And I talked about this in the last video. But remember, when you're ahead of the game, the market is not going to do what you want it to do exactly at that moment, next hour, next day, next week. It takes time. All right. Uh, Talked about oil. This is back on March 6th. I said, look, there's going to be some resistance. The first line didn't hit. Okay, so this is wrong. The second one did. Okay, and it pulled back hard. Went down to 62. Now it's up to 68. Now keep an eye on this. Should this break out, that would be problematic. Okay. Conversely, keep an eye on this. It start to reverse. It'll take some time, but I'm just telling you. All right. This is back on March 6th. Now the other thing is that unless it really if it breaks, just so you know, if a structure breaks and it doesn't follow through with a rapid descent, you gotta get out. It's not what you're looking for, right? These kind of tight, boom, they should explode to the downside. If they don't, if they're not paying you like almost every day with price depreciation, if you're short, then you got to get out. Got to get out. All right. All right. JetBlue is hitting a brick wall. Sure enough, it did. Okay, kaboom. This was made March 29th. Jets, Head and Shoulders, be careful. Okay, back on April 20th, kaboom, down it came. Gold Airlines, July 18th, boom, came down. All right. Now this one is the one I like. Why? Why do I like this one? If you go back to 9/11, and it's going to be 9/11 here soon, we should remember the fallen. Now, if you go back to 9/11, you had the big drop, you had a correction to the upside, and then it started to fade away. The recession in airlines and in the overall economy didn't come until March, April 2002. It was a year later. A lot of people don't know that, by the way. Okay. So my question back on May 2nd was, hey, are we kind of seeing the same thing here? Because I don't see airlines as a whole. I'm not just talking about the U.S. as a whole. I don't see airlines really recuperating for a couple of years. And if you don't know it, I'm an airline captain, so this is my business to kind of question these things. Um, I'm thinking that, I wonder if this is going to be the same deal. And so far, it's doing a pretty damn good job repeating 2002. So food for thought. What else? What else? What else? This is when I said Jets caution. This is February 23rd of this year. All right. Sure enough, kaboom. All right. So remember, trades take time. If you're charting and your charting is good and you understand what's going on, you're going to see things way ahead of time. All right. Um, Now, in terms of economic data, if you guys are following it or whatever, you're going to see the drop, right? So let's say the chart kind of looks like this. You're going to see the chart drop because of lockdowns and what happened in COVID. And then you're going to see a pop, and you're going to be like, oh my God, we're going to the moon. This is wonderful. And then you're going to see the drop. This is normal. This is where we are right now. Everything's kind of coming back down to normal. The question now is going to be if this is the average somewhere in here, will it kind of level off and go back to normal, or is it going to tank again? This is what we got to worry about. Okay. The next thing, when does euphoria start to go away? When do we stop saying, well, you know what, it's not a euphoric market? It kind of makes sense. Well, there's a number of things that you can look at, which I won't talk about here, but there are some indicators that are going to show you and kind of tell you that, you know what, yeah, okay, we did have a initial euphoric kind of move, but the economy's kind of catching up. There's some corporate profits that are doing what they're supposed to do. It's, there's some correction in the market. I think we're out of that initial euphoria, you know, phase, and maybe this is going to last a little bit longer than we think. There is some indication. Right now, we don't have that indication, um, but there are things to look at that would give you some really good clues about that. All right. Is the market euphoric or is it not? For now, it's euphoric as hell. What else? Lumber has been coming up. Lumber was up 37% from the bottom. I remember a lot of guys are like, "Oh, look at lumber. Lumber's coming down. See, it's all over. Don't worry about it." Yeah, right. Okay. Well, it's up now 37% in about 3 weeks. That's problematic. I think you're going to see inflation persists, and that is based on this chart. Uh, we are almost ready to make new recent highs again. You can't see it with all these things, but look at that. Okay. This is coiling up for more upside. This is problematic because people are going to start to figure out that there's a real inflation problem instead of this transitory nonsense. Uh, Transitory is just, you know, transitory is like, hey, don't worry about it. It's going to go away. No, no. If a home costs $200,000 and now it's worth 24,000 dollars, goes up, or actually 250,000, goes up 24% from last year, and then it starts to level off. Well, that 50,000 appreciation is good if you're a homeowner. It's not if you're looking to buy a home because it just got 24% further away from you. Now apply the same to rents, up 14%. Now you're going to start seeing food, right? It's going to start costing more and more and more to buy food. And people are going to be like, shit, I used to pay this much and now I'm paying this much. This is a problem. And when they start to figure that out, oh, oh, things are going to get ugly on social media, on government, and that's going to affect the way the economy behaves, how people spend their money. It's going to be a problem. Okay, so keep that in mind. Um, China, nothing there. Europe, Europe, nothing there. Okay, just kind of going sideways here. What else? That's about it, guys. Okay, that's about it. I don't have too much time anyway. About a minute and a half left. Well, thank you for subscribing. Let me just quickly, shit, I just remembered it. A couple trades that I put up. Rio Tinto was one of them. Come on. All right. Sugar is sweet. Kind of remind everybody. Look, Oh, come on! Don't give me the airlines. There we go. Sugar is sweet. Just kind of want to remind everybody. Um, this was a really good call. Okay. I posted it back on April 15th. Again, trades take time, right? And sure enough, off it went. So that's very good. This is a reminder. I don't think this is going to end anytime soon. The other one, which one was the other one? Rio Tinto. Rio Tinto. Look for this one to bounce here. Okay. Look for the hook. You don't have to buy it now, but once it starts to hook, look for another move to the upside. All right. So I posted that as a free trade for the week. And let me get rid of this. And that's about it, guys. I don't think I have more time. All right. Take care. Have a great week. And I'll talk to you guys probably next week. Take care. Bye bye.